Good morning, traders, and welcome back to Monday's Market in the Morning episode. I hope you guys had a fantastic weekend. Drop some good mornings, drop some W's if you're ready to make some money this week, because Market in the Morning starts right now. We're going to break down some fundamentals. There were some big headlines that came out over the weekend as well, some conflicts starting to rise, missiles launched. We're going to cover all of those headlines, give you guys some key levels as well to watch on the S&P, the NASDAQ, and gold. Guys, let's get this week started on the right foot. So Market in the Morning starts right now. Alrighty, good morning, guys. Let me take up our Market AI screen. Good morning, let's go, Jason. Yes, sir, Jason, Ozzy, good morning. Throw some good mornings in the chat there. What's up, everybody? Matt, hello. Can you go over some supply and demand zones and structure? Absolutely. Let's go over some of the headlines first. Make sure we're not missing anything that's crucial towards the market environment, because we got to remember, Friday we had one of the biggest sell-offs of this year on the NASDAQ and S&P, and gold also saw some crazy selling. So let's take a quick look, see what's going on there. Good morning, everybody. So we'll start with gold, and then we'll make our way through NASDAQ and S&P 500 as well. Now, gold's still showing a more bearish day trading bias. Oil spikes on Israel-Iran escalation keep inflation fears high for gold. Let's run down our day trading bias on GC. What supports the bias? Oil price surges on Israel-Iran strikes, lifts inflation expectations. Yes, sir. Shout out to all the XAU USD traders. XAU USD, GC, they're both gold assets. So whether we're going over GC or we're going over XAU USD, they're both gold. So whatever the analysis is here for GC, it is similar for XAU USD. Threats to Hormuz and regional energy infrastructure tighten supply. So here comes that whole idea of tightening supply because of higher oil costs and everything else in between, due to the supply deficit, right? If there's a supply issue, price gets much higher. We just had some headlines right there. Look at this, guys. Israel pauses attacks on Iran as Trump requested. Wow. Okay, so now we have Israel listening to Trump now a little bit here. Gonna hit our brain icon, really break it down and see what was the escalation, what was going on. The headline signals a temporary de-escalation in a highly volatile Israel-Iran conflict, reducing immediate tail risk for energy, global risk assets, and safe havens. Markets are likely to unwind after some war premium in oil, gold, and support equities, and modestly pressure classic havens, which again is gold. Exactly. Welcome. You got it, man. Short-term optimism coming in with this headline right here. Let's take a quick look at our gold chart. Take a look, GC right over here. And then we'll also cover some silver today. I feel like it's very important we take a look at that too. We could delete this old zone is no longer valid. This was our shorts we were looking at, remember, on Friday. And let's see if we have any areas of interest. Always important. Just keep an eye on the daily. And the first thing we see on the daily time frame, guys, turn all the drawings off. What do we see? We see that gold is down from its all-time highs 23%. This is most definitely not just a pullback phase, but in more of a correction territory below that 20%. So now we're finally finding some good areas that big institutions might be looking to start to load up on gold again. Now, I would still like to see some more downside. Essentially, would want to see this 4164, and ideally I would want to see 4,000 on gold futures, exactly, for a much better price point. Look at the momentum we had yesterday on this big drop we had. We dropped about 160 points, 137 points on the bar itself, but 166 points in the total move, really giving us some momentum on gold. And take a look at the volume. It was also picking up here. So as much as that headline was giving us some optimism, just like Welcome said in the chat, it's more of a short-term optimism, might even give us a small relief rally. Ideally, I would want to see if we could come back to this area right over here. This is on GC around 44.50. If we want, we could put up XAU USD over here as well, so we could get you guys those price levels too. Here we go. Perfect. So let's see. Same area right up here. XAU USD, we're looking for this spot right there. That is around 44 to 44.20 on XAU USD. And that is 44.50 on GC futures. Right now, we are trying to make our way back there. That is about 83 points. We would call for a very big move. We can see if we want to come back to that area. We could check our 30-minute time frame, 15-minute, just to make sure we're not missing any points of consolidation before the move continued. And I'm really not seeing anything much. So really looking for that 44.40 on gold. And like we said on XAU USD, that's going to be around 44.20. So that's gold, guys. We could take a look at S&P and NASDAQ as well. Again, getting some more headlines. IDF says projectiles fired from Lebanon after sirens sounded. Israel's Channel 12 citing senior Israeli official. If Hezbollah attacks on Israel towns continue, Israel will attack Beirut southern suburbs. Ooh, that's getting feisty, guys. Now, what's cool too with market is we could hit our breaking news tab, hit our search icon, and we could look up keywords. Do I want to, thank you, bro, I appreciate that. Do I want to find some type of headline that's about Iran? Do I want to find something that's more about Israel? Do I want to find something that says something involving Trump? Let's see what Trump said over the weekend, other than he's going to the Knicks game tonight. Guys, Knicks in 4. Drop a Knicks in 4 in the chat, man. World peace if the Knicks win this. Just not for the city. Israel poses attacks on Iran as Trump requested. As we know, we just covered this about 5 minutes ago, sort of showing Trump's power, right? Possibly. Trump says Israel, Iran seeking immediate ceasefire, final peace talks underway. This was an hour ago. Now, when it comes to headlines regarding final peace talks, a final deal, all this final, this is like headline number 5,000 that's mentioning some type of final deal or peace talks. We're in a war right now. Wars don't start and stop within 3 months, and it's not just going to stop because of one headline. If you haven't learned that yet using the market terminal, you might want to pay a bit more attention. What else do we have? We have Trump blockade will remain in place and in full force and effect until a final deal is reached. This is going to be dragged out. We all know it's going to be dragged out. Trump, both sides, Israel and Iran, are looking to do an immediate ceasefire. Again, nothing major, nothing new. We've been in this ceasefire since markets started rallying. Let's see when that was. That was, comes our daily time frame here on NASDAQ. That was the end of March, last day of March. That's when we got our ceasefire. That's when markets started rallying. 33% on the NASDAQ. One of the biggest moves we've had in history in that short period of time. 33% in 64 days in 45 bars. That is a little over 2 months worth of trading. But what did we get yesterday? We got a major sell-off for 5%. Now, we always talk about catalysts and we always talk about major moves when it comes to markets reversing. This move right here, in my opinion, is a major move. And it's good because if you guys were tuning in last week, during one of the episodes, I was talking about watch out for specific percentage moves in the NASDAQ and ES. Remember, we were talking about the ES 10% level, which was right here, and we reversed. Now, NASDAQ gave us a 5% single day drop. That's a strong enough move to possibly shift in trend. So what am I looking for? I'm looking to see if we can find some selling to come in. There wasn't really anything too major, and we could come back to our market terminal. We could even come over to high impact. What's cool with market is we have our news feed. We have all, and that's going to give you everything. And then we have popular. This is the one that most people are bookmarking the most. And then we have breaking news. That separates the all to the breaking news, things that really move markets. But then we go one step further. We go over to high impact. High impact gives you just the most strongest of headlines that have resulted in some type of move. Yo, good morning, Moth. Good morning, brother. How are you? Abdullah, good morning. Matt, Jason, Ozzy, good morning. Welcome, good morning. Hello, Mr. Random. Eric, hello. George, hello. Everybody, good morning. Hope you're all doing well. I hope you guys had a great weekend, man. It's Monday. Hope you guys are ready to make some money. Market TV, Market in the Morning. We're rolling all week again this week, guys. Let's see. So first high impact, we have Oil prices paired gains after Fars news says Iran's armed forces announced end of military operations against Israel. Okay. So oil prices gains. Let's take a look at our oil prices right now. Unfortunately, what's up, Ted? Unfortunately, in my opinion, we're not going to know for sure that the war is settled. Things are back in a stronger position for the global economy until we see oil get back to its more normal prices. Now, unfortunately, the longer oil stays between this range of 105 and 80, what's going on, brother? The longer oil stays within this range, the harder it's going to be for it to get back to that range. We're not going to get one big headline that says the war's over, everybody's coming home, and oil completely dumps that day 30%, 40% down to that $60 range again. We'll probably get some type of headline and it will be a buildup that the war is starting to end. Again, though, it's not just an attack, it's a war. These things take time and they're usually dragged out. At this point, oil's still within a range. I would not look to trade oil at all at this price level, right? We're very range bound. And what do we see? What do we see with oil? We see that whenever it's trading in the middle, right? So this is our major high, this is our major low, and this is our middle of nowhere area, this red box that I just drew. We see that every time oil is trading within this range, continuation fails. We try to move higher, we pull back. We try to move lower, we pull back. We try to move lower, we pull back. Try to move higher, we pull back. There hasn't been any continuation when oil is at these in this range, but there is reversals when oil comes to the extremes. So when oil comes to the extremes, that's when we want to pay more attention to it for possible trade setups. Not only to pay attention to it for possible trade setups, but pay attention to the headlines that are coming out. If out of the blue we see that, okay, wow, look at this, we're at $80 on oil, guess what? We're probably going to get a headline. We're probably going to get a fundamental move, and it's probably going to bring us right back towards the opposite direction again. Just like every time we come up here, we get a headline that brings us back lower, right? Just like Nolab mentioned, and all of our homies from our last week's episodes mentioned, it's damage control. It's not ending a war. It's damage control. Higher oil prices for longer, as we all know by now, equals higher inflation. We take a look at our inflation report. We can take a quick look at our economic calendar in a moment. But our inflation, our core CPI, our core PCE, core CPI is still 3.8%. Core PCE is still 3.8%. There were some headlines and some news articles coming out over the weekend about Kevin Warsh reading PCE with a bit of a different reading where he was cutting off some sectors. And what that does is it gives us a better reading on PCE, which brought PCE inflation lower, but that's not really changing anything. How do you open the subtitles? Let's see. Can you please open subtitles on what? You can, I'm pretty sure on YouTube, you can hit the settings icon and there should be a way to add automatic captions or automatic subtitles. Let's check our economic calendar. Now, this week is going to be very light on the economic calendar, and for the most part, we understand that was going to happen because last week was very heavy. Last week, we had 4 out of the 5 days were giving us CPI, PPI, inflation reports, job data, everything under the sun. This week today, we have a whole lot of nothing. We have our 3-month and 6-month bill auction that is not going to impact markets the way they normally do. Tuesday, we do not have much. We do have international trade. That's our trade deficit. Now, I will mention this one sometimes has an impact on markets, as if it's in an extreme level, we get a reaction. So international trade tomorrow, 8:30. You guys better be here to cover it live on Market in the Morning. Forecast is negative 56 billion. Bank forecast is also negative 56 billion. Prior was negative 60 billion, minimum of negative 60 and maximum of negative 45. Yo, good morning. Good morning, Jermaine. Good morning, brother. How are you? Unavailable? I'm sorry about that, man. We'll see. I'll look into it, see on my side if there's anything that we can change on the settings. It might be because it's a live stream that it does not allow the caption. So you might have to watch it on a replay to enable those captions. Existing home sales tomorrow, that's also not the biggest of impacts, but it still is a high impact event. So we do want to keep an eye on that as well, just to make sure it's not coming out at an extreme. Something I want to point out to you guys that you should always know about these economic events is if it's something that isn't like CPI or jobs reports, is that if it's something like international trade deficit, existing home sales, for the most part, the only time it does make that big of an impact and that big of a volatile move in the market is when it's above or below the minimum and maximum number, right? So if it's above maximum, we get a reaction because it's a surprise, right? We'll circle back to a few weeks ago when I was always telling you guys markets move off of 3 emotions, and that hasn't changed. Markets move off of optimism, uncertainty, and surprise. Optimism gives us rallies. It gives us hope, like hopium in the market. People are buying, buying, buying. This is going to happen. We're going to get rate cuts soon. Or it's optimism because, wow, all these big tech companies have earnings soon. We're excited about it. We're going to have double beats. And then there's uncertainty. Trump announces brand new tariffs on all countries except for China, blah, blah, blah. New tariffs, that's going to impact big tech companies. Big tech companies and big companies in general, even automotive, they have to import things. Well, if they're importing items and tariffs release, that's now more expensive. That makes the price for consumers more expensive because these big companies pass down those prices. So what happens when consumers spend more? Inflation moves higher. There's uncertainty, and uncertainty usually leads to large investors, the billion and trillions of dollars in the markets, to start to pull from it out of the fear and uncertainty. And surprise. Surprise is when we beat expectations by either maximum or minimum, and a surprise could really lead us in either direction depending on the report or headline that comes out. Wednesday, we have, again, a whole lot of, here we go, we got a little bit of something. We have CPI on Wednesday. Finally, guys, we'll give you top 3 dots, settings. Yo, beautiful, Casey over here. Top 3 dots, settings, accessibility, live caption. Guys, this is teamwork right there, man. Here at Market in the Morning, here on Market TV, we are not just a show for you guys, but we're building a community. So drop some comments. Let me know. Introduce yourselves. What's your name? What do you trade? And meet some of the other people in the comments too. It's all about networking. This community, this industry, trading, it is the most difficult industry to get into alone. Build a strong base around you and you'll find good foundation. Yep, exactly. And doubt/lack of information leads to consolidation when market makers follow, wait, and see approach. Exactly. So CPI is one of our biggest reports this week. That is June 10th, Wednesday, CPI. Thursday, we have our PPI. Wonderful, guys. So here we go. We are getting some news this week. CPI, PPI. That is going to be 8:30 Wednesday. Thursday, we have PPI, 8:30 Thursday. And then Friday, we have Michigan Consumer Sentiment Preliminary. This is another big headline, and that'll be at 10 a.m. Now, usually, if this was the old market show, we would not be able to cover this, but because we're running these shows through New York session open until 10:30, we'll be able to cover this one with you guys as well. Everyone, I hope you're excited. Good morning. Hello from Nigeria. Hello from New York. I hope you guys are ready because Mr. No Lab, one of our co-founders and CEOs of Market, is going to be joining us in just a moment. He's going to share his screen. We're going to cover some headlines. I do need to show you guys some ES and NQ levels. Yo, Charlie, what's going on, brother? How are you, man? Good to see you in here. Awesome, man. Let's bring on No Lab. No Lab, good morning.
How's it going, Kevin?
Bro, I'm doing good.
Good morning.
How are you doing? How was your weekend?
It was good. It was just filled with work. As you know, we're working on a ton of cool stuff. I don't know if you saw it. Did you see what we built over the weekend?
Bro, I saw it, man.
Should we sneak peek it during this?
You have to.
We'll do it after like NYSE open. You know?
No, do it now. Come on.
No. We'll let the suspense build. We'll go through the markets first, you know, and then we'll show the dude. I think it is one of the greatest things we've built so far, and the amount of value it's going to bring to users. It's going to make the platform so much more usable, so much more beneficial for everyday traders. Nixon 4.
Nixon 4, baby.
That was hilarious. But yeah, let's jump into it. I see you have ES open, and I agree with the slightly bearish bias. But if you remember, we were talking about the buys from the lows on ES and testing that key demand zone while the markets were pricing in the Fed hawkish repricing, right?
Yep.
After we had the hot labor market data and we had the flip watch come up on Friday talking about, hey, the hot labor market data is going to hold weight and markets are pricing in a rate hike in December. So that caused an outflow, but it only caused an outflow down to this known demand area, which we were previously mentioning was going to be a key buy zone if the markets came and retested. So the markets came and retested over here, and the same price went from over here. And now we are, as you can see, we have continued to push up, and that same trade idea has played out. So either I personally entered half my position before market close on Friday. I entered half my position, and then the other half I entered on this pullback right here. And this was because we were at this key demand zone, and we've talked about it previously, is that I'm expecting the markets to do these bounces because we have been delusionally optimistic. We have done these bounces before after seeing a quick repricing during de-escalation. So when this stuff happens, you have to keep in mind, what do we have upcoming this week? First of all, we have CPI being the main meat and potatoes for the week. And we are releasing this integration to TradingView this week. So stay tuned. All market users will have access to this, and you will be able to use it directly on TradingView. So we have CPI this week, which we can check the playbook for. If we come higher than the maximum, as we know, that means that we will get a very bullish reading, right? So bullish dollar, and that can push equities and gold down as well, because it will mean that rates don't have to go down. The Fed can maintain the rates to conquer inflation, and that's what the focus is on, right? Is that we got a strong labor market report right over here, and what did that do? That caused massive repricing across the board. We saw equities come right back down 300 points from the highs to 73.51. And I talked about it last Friday, is that if we do even get a pullback down to here, guess what I'll be doing? I'll be buying, right? So we talked about it Friday. You can see the execution. Go to the next part, and you can see that it's as simple as when you see this repricing happening, you know there's going to be a relief. And that relief is often going to be until there is the next catalyst. So now when we're looking at the economic calendar and we see the upcoming catalyst is US CPI, which is later this week on Wednesday, June 10th, with the forecast being 4.2, prior being 3.8, 4.1 being the minimum, maximum being 4.3. So we know there's going to be an increase over the prior. We already know this, right? We know since the forecast is like 4.2, minimum is already expectation is 4.1. So this is the report that's going to feel the inflationary pressures that we're seeing. Now, if we exceed this maximum, somehow we go from 3.8 to 3.4, or even 3.8 to 4.3, or even 4.4, like that is touching the maximum, and you're going to see that excess volatility, and you'll continue to see the rotation out of gold and out of equities for the time being, because higher rates are not good for either of these markets. And markets will price in an increase of rate hikes, increased odds of rate hikes. And then again, here comes that focus coming back on rate expectations and rate decision probabilities. So remember, at the start of the year, we started to lose focus as the war came in. And now our focus is slowly shifting, not entirely shifting, but coming back into focus. As you can see, this massive outflow was clearly caused by that hot labor market report. So when you understand this, and on Friday's stream, if you look at us breaking down how we had a flip watch come in, and just like how we have a different flip watch right now, we have this bias being slightly bearish. But what this means is that we have a flip watch here. Oil prices paired gains after foreign news says Iran's armed forces announce end of military operations against Israel. It's a bit of a relief. We're seeing that relief. It's also a technical relief as well after we've just had a massive outflow. Yep. Now, where can this technical relief go up to? It could go up to this key area right here. It could go up to this key area right here, 7,500. or even 74.80s right about over here. Now, what this means for us is that if you're in buys from here, it's great to close your partials and then leave a runner, and then maybe somehow randomly just ends up going all the way back, whatever. But what we can expect is a potential revisitation of this area again before we see a complete shift in structure. Whether that may be from if we push up into here, hot CPI comes out, and then the markets come back down here, maybe, right? But does that necessarily mean that we're bearish on higher timeframes than equities? No, it doesn't, right? It still means that we're quite bullish, and that oftentimes you'll see these areas get revisited several times. Like you can see, we had several price action. We had one, two, and then price came right back down to here, consolidated, more buyers came to the market, and then we went to new all-time highs, right? Or we get something like this, where it doesn't cause too much of a reaction. Maybe CPI brings markets down here, we create a higher low, and then we continue pushing up. So it all depends. This is a very pivotal point for markets. As you can see, buyers are quite active here, and they remain active. It's the same buyers that drove the price up here. We knew that there was going to be buying pressure, especially after that relief. If we saw buying come in here after this sort of relief, like we just came off of all-time highs. This is a 300-point drop from one jobs report. And markets are delusionally optimistic. So what are they likely to do? The probability is on the higher side that we're going to see a relief from this area. And that's exactly what happened, and also we talked about it being the start of a new monthly candle. So now when we start to piece things together, is that what if this is the next month's low, or if this ends up being the new monthly low, maybe revisit this area, start changing structure, and then that pullback phase would then be over. But right now, we don't have enough information to dictate whether the pullback phase is over yet or not. You have to let price action develop, especially because you had these lower highs, lower lows, you had break of this structure. Now all we have done is respected this low. And we have just done a quick bounce overnight, and which has held. And this is great because in the lower time frame, for execution purposes, you can clearly see that this provides us great opportunities to take advantage of markets, especially because the markets didn't open with any gaps. We barely got a single gap across the board, right? Besides on gold and oil. So markets opened over here. I had taken a position, half my position before close, and then we had the escalations over the weekend. So I was like, okay, worst case scenario, I get stopped out from my stop loss down here, which was 20 points. 20 points was my stop loss. And then best case scenario, it just opens at where my price is. And it opened at where my price was. Once we got this retest and closures back above here, I added more to my position. And then you can see the change in structure that we had coming in from the hot jobs report, where you had that double bottom, you had higher lows starting to print over here, clean breaks back above structure over here. You're maintaining this lower time frame structure as well. And now you're headed back up into those more intraday areas of price sensitivity, where these are good take profit areas, and also places to keep in mind that in order to continue up to the next one, you'd have to break up above here. And then this would be the next area you go to. But when you're looking at these intraday plays, you have to keep in mind that oftentimes the market does like to revisit the same area multiple times before it even changes that intraday structure, or more buyers to come into the market. So that's what I mean, is that maybe we'll have to wait another session, another day post CPI to see how equities line up, and then revisitation of those all-time highs comes over the course of the month. So you have to look at markets like that. You must look forward instead of just looking at, oh, what could happen in this session. You really have to see how this paints out for across the board. Like gold, we've been bearish on gold. We've been calling out, we called out these gold sells up here, right? We called them out right here, Kevin, for the entry here, which those played out beautifully for the jobs report. And then we also talked about this gold sell over here. We called out this gold sell on market in the morning, and then as well as the NFP gold sell. So we were positioned for gold in a bearish trend, and a lot of people were getting too short-sighted on these bullish pullbacks. It's the same as equities. It's the same on gold. If gold now respects these highs over here, guess what's going to happen? We're going to head back down to potentially this area or continue a bit higher until we get more sellers in the market, hotter CPI report, then we'll just drive gold lower. So now where can gold go up to before we see more sellers? So we're still quite bearish. We've just created a new intraday low. So what we now need to map out is these areas of interest where you get the sellers wanting to jump back in, and which seems like a good selling point. So right now we saw sellers previously come in here during market open hours and then drive gold right down to 42.75, and now we're headed back towards this area. So this is an area I would like to watch out for and see how price reacts over here. Yeah. Another area would be like 43.75 or deeper into 4,400. Nevertheless, what this would mean is that I am now looking for that pullback sells. I'm not looking for these buys right now. Where those buys would have been good is earlier this morning, those buys from these lows, once you saw these lows get respected in the lower time frame right over here. Other than that, even this is, I wouldn't buy into here. You wouldn't want to buy here. You just want to get some sort of premium entry here just because gold is bearish. And when you're counter trend trading, you want to be as accurate as possible, right? Kevin, like you don't want to take the lousiest entry when you counter trend trading. Like let's say you take a buy here after gold in the lower time frame has already pushed up like $40.
Yeah, don't buy after the move.
Yeah.
Awesome, guys. Let's run up some levels. Nil, you mind if I take over, run up some levels?
Absolutely.
NQ? Awesome, man. Awesome. So overall, bias-wise, right? We had the big move yesterday. I mentioned Nil before you joined in. Yeah, no, percentage-wise. We were covering that last week. Remember the magic 10% pullback area on
Magic 10%, yeah.
Well, we had a 5% move on NASDAQ in a single day. And a few things can move markets. And one of the main things we look for is those big percentage moves at pivots like we have up here, like we had down here. Now, what I would like to know, now this was last month CPI that came in at 3.8%. It gave us a 3-day pullback. We have CPI in 2 days now. We already had this big pullback from non-farm payroll. CPI is most likely going to come out higher as well. Are we going to get a similar reaction that we had here, but on a stronger scale, seeing that we're already starting to see some stronger outflows? Ideally, what goes up must come down, and a lot of times, as long as we take to go up, we go down a lot faster. So do we get some type of crash? But now from an intraday scale, we don't really, not that we don't care, but we want to know what's going on right now. On NASDAQ, the main area that I'd really be keeping an eye on is this 29,800. This was the last point that price consolidated yesterday. We could look at it on a 15-minute time frame, right in the morning between 9:45 and 10:45. For a full hour, price was range bound until it gave us a 900-point move on NASDAQ to the downside from this zone. So I'm going to be looking for a similar reaction. Might not be a whole 900-point move, but I am going to look for the sellers that were active on Friday to still be active today to give us that reaction. Maybe target VWAP, maybe target the most recent pivot that we have, which would be this one at 29,364. But that would still result in over a 300 to 400 point move on the NASDAQ today. Really healthy move. This area that I marked out too on the hourly here, if we extend it to the left, what do we see? It was support. We're below it, looking for it to be resistance. In the past, it was also resistance. This is a very key pullback zone on NASDAQ that I want to keep an eye on for possible shorts today. If we can scale above it, right? Let's say fundamentals are still bullish. The economic data wasn't strong enough to give us a full-blown reversal. Then what I would look for is a break above this zone to then target that previous day high. A lot of times in these markets, what we'll notice is we take out a previous day low before reversing back to previous day high. That would call for, again, a huge 1,500 point move on NASDAQ. Is it improbable? Yes. Is it unrealistic? Yes. Is it impossible? No. Nothing in these crazy markets is impossible, but probability-wise, probably running a bit on the lower side there. So that's why I would be a bit more interested in shorts, sort of near that halfway point of that previous daily candle, to just give us either continuation and target the open price today, or even just give us a pullback, and VWAP will probably be somewhere near this 29,140, which is also still below 29,350. So we will keep an eye on that. Let me delete these drawings out real quick, then we'll cover the ES. Let's see, there we go. All right, now the S&P 500, similar levels, similar zones, similar setup, except that we do have this point of consolidation. Like Nalab mentioned, this would be your take profit 1 if you were already in a long position on the ES, right over here at the 74.65. Yep. Next point of interest, I got 75.11. Same thing, hourly area where we consolidated, same time frame between that 10 and 11. Then the S&P 500 gave us a 140-point move. That's mind-blowing, guys. We do not get those moves every day. We get maybe 40-point ranges, 50-point ranges. Our big days, we get 80-point moves on the S&P. This was double that, 140 points on the S&P on the intraday scale. And that wasn't even. That was just from that zone. The entire daily time frame right here, if we took it from our 6 o'clock, over 200 points, 230 from high to low on the S&P. We're entering volatility. Something else I like to keep an eye on, and you guys should be aware of too, is the VIX when it comes to trading the S&P and NASDAQ. And VIX also had an extreme spike higher. It broke above $20. $20 is considered the fear gauge, right? When there's fear entering the market, VIX is above $20. So that's also going to be one of my main confluences today, is if VIX can break above and remain above the $20 mark. If VIX breaks and holds above $20, I'm going to be looking for strong momentum to the downside on the S&P and NASDAQ today.
Yeah.
But let's see, real quick, we'll cover NASDAQ in our market terminal as well. Iran conflict and higher Fed path still kept NASDAQ upside. Our flip watch, oil prices pair gains after FARS news says Iran's armed forces announced end of military operations against Israel. Yeah, highlight the zones on XAU. Yeah, I got you guys for sure. Give us one moment there and we got you. Supporting bias for the downside on NASDAQ. Rising geopolitical risks boost oil and inflation, right? If it boosts oil, boosts inflation, that's taking capital out of big tech. That's causing big tech to spend more. Return on investment is less for the investor. They get panicked, they get uncertainty, and they start to sell. Yep. Fed hike risk repricing pressures along duration. Same thing. We could take a look at now our interest rate tracker on market, and we can see, look at that, man. That's crazy. We have now a almost 20% chance that we hike rates by September. This is the most we've seen all year for a percent chance of a rate hike.
Yeah, of September. And the odds of December are like 60% right now.
Oh, that's crazy. Let's see, guys. We can check our Fed Watch tool and see what's popping there. Oh, look at that. Our next Fed meeting, 9 days. We'll see what that'll be. Kevin Warsh's first meeting.
Yeah.
No pressure, Mr. Warsh. But you better
Powell was the man, though.
Yeah, I know, right? No one will ever beat out Powell.
Yeah, no one ever will come close to Jerome Powell in our lifetime.
Yep. Wow, look at this, man. You're 100%.
I know the OGs will probably say Alan Greenspan or even Volcker, but when Volcker was on his rate hikes.
Yeah.
80s, but Powell's our GOAT.
Yep. Modern age GOAT right there. Michael Jordan.
He's a Michael Jordan of Federal Reserve Chairman. Yeah.
Yeah.
Honestly, Powell's Kobe. Powell is Kobe Bryant. Yeah. We'll give him that. Jerome Powell is Kobe Bryant of the Federal Reserve Chairmen.
That's great, man. That's great. December, that's crazy, man. At some point, 75% chance that we don't change, and we had a 10% chance of a rate hike just a month ago, a cut just a month ago. Now 43% chance of one rate hike. And it's not even like, oh, it's a 43% chance of a rate hike. That means it's a 60% chance we don't move rates. No, it's only a 30% chance we don't move rates. There's now a 20% chance of 2 rate hikes by December. So 20% chance of 2 rate hikes, 40% chance of at least 1 rate hike by December. That gives us a combination, just like Nil said, 60% chance that rates are higher by December. This is something markets are going to start to price in. This is something that can have that effect. Like we mentioned, that daily time frame, those big moves, a big move combined with a big headline or catalyst for the market. Guess what? Rate hikes on the table can be a catalyst for the market. That brings us uncertainty. We say optimism comes from rate cuts, while uncertainty and fear comes from rate hikes. So we'll really be keeping an eye on that. In my opinion, today is going to be a strong make or break day. If we stay higher in price, I think we consolidate and just continue trend. If we do start to break back lower again on this daily with the momentum we had and the volume we had yesterday, then I do think we're probably in for some strong downside.
I think CPI's main focus for the week, whatever you get before CPI, take it. Take your profit, and then wait for CPI. You want to see how this report prints. If it prints hot and it comes again above the forecast of the increase that they're already expecting, the minimum is already 4.1. They're expecting it to increase to 4.2, an increase of 0.4% off the previous. Now, if we get a hotter reading than that, then you know the markets are going to continue pricing in that Fed hawkish repricing. Like you're going to get that more repricing happening. You're going to see equities potentially come right back down to these intraday lows, right? You're going to see gold continue to drop down too. And that's what we're talking about here, is that gold's trend is still very bearish. So we're just looking for those when we're breaking down now ZAO. We can highlight those ZAO levels if you want to just share my screen, Kevin. I just have it up right here. All right, perfect. So I think we continue, and we're going to continue to taking advantage of these short opportunities, right? Kevin, when we see these large intraday retracements and then moves like this, any intraday plays just get faded out towards the downside. So what they make for us are great opportunities to enter with the trend. In this case, we look at the bias on gold is being bearish, right? We're getting a continuation of escalations happening. Every de-escalation that happens gets walked back, and then you see complete blockade. You see missiles happening over the weekend. So what we have to do now is just look for those advantageous areas to execute on this bearish day trading bias. And that way, what we can avoid is getting caught up in trying to call a bottom, right? Trying to call a bottom on gold because you think gold is bullish due to this wick. Is as we talked about it, so we've been talking about it since all the way back here, is that gold was eventually going to continue on its path towards the downside. And guess what? Any one of these intraday retracements gets faded out, which is completely fine, right? So levels I'm looking out for in this case is for this session, we will watch and see how we react to 43.50 on XEUUSD. 43.75 is the main level in my eyes, which is why I have this zone drawn around here. So a short from there would be very well tested, and I would love to execute on this, as well as, and we'll look for some scalping opportunities if in the meantime we retest an area like 43.50s. We could potentially see short-term downside till 4300. But I think the better shorts are going to come from these higher areas, which are towards the upside over here, like 4400 or 43.75. So those are some things to keep in mind, that we are still bearish. We're not, just because we're getting this minor bounce doesn't mean structure has shifted. This is just in the past 4 hours that we've seen this move happen. So what the best thing to wait for are price points like this and over here and a bit higher. And when you have these, now you can sit on your hands and you're not getting caught up in chop like this. Let's say you enter short here. Maybe it plays out. Maybe, it plays out from here. But I don't really see anything here until like this is the price point where we had the sellers come in overnight in the Asian session, which drove to these lows. So we know there's active selling that happens up here. So let's just wait for an area like that to play out, or wait for higher price points, which in my opinion are the ones that are a higher probability to continue towards the intraday lows. So those are the levels that we are looking out for. And of course, as I was talking about in equities, every gold pullback that we're getting, every bullish pullback, I'm just going to look to sell at a correct price point, right? You're not going to blindly sell. You're going to base a sell off of the trend. And every pullback that happens, you're going to sell. I'm not looking to take sells here personally. You could be looking to take sells here, but I'm personally looking to wait for any one of these levels to get hit before I look to execute on gold sells, just to give myself a better risk reward ratio. And because these are the price levels that I have marked up and what I see on a technical bias of where price could go up into before testing, before sellers jumping back in. Now, ES, again, as Kevin was mentioning, great take profit area. So if you haven't taken profit yet, you should. We're going to go into 9:30 a.m. New York Stock Exchange open. Kevin, do you have anything you want to go over real quick?
I think we covered for the most part most of it. Really just a matter of wait and see when it comes to this week with CPI and PPI. But what I would really want to note too, and what I'd really focus on more today, is I'd focus more on the shorts on gold than any positions on ES and NQ.
Yeah.
As it's hit more of a wait and see moment for the S&P and NASDAQ, whereas gold has been on the downtrend.
Yeah, I agree. I 100% agree with what you're saying.
Somebody asked, where would your stop loss be if you take short at 43.75?
Yeah. So let's say you took the short not at 43.75, because it's not always perfect, right? Let's say it goes up to 43.70, whatever, 71, and you take it there. I would still have a fairly decent size stop loss, and my stop loss would likely be around 150 to 160 pips, which is about a $15 or $16 price dollar stop loss. And then of course, you can see your downside is higher, right?
Yep.
You have a much higher, so which still gives your intraday trade breathing room, right? And how you validate this is, let's map some stuff out. This will be a fun little activity that we can do here. This is why I love market in the morning. It's just fun to break markets down and map out these scenarios. And when they play out and when they start setting up, you just feel more confident because you've gone over them so many times. We've iterated into our brain that this is what we need to watch out for. So let's say we attempt to short here. Okay, let's play out some scenarios because this is what we're talking about. Let's say we get this double top here. We attempt to short. It plays out towards this downside, okay? And then, okay, maybe we don't break it and we head towards the upside, okay? In this case, this one didn't play out, all right? So now you still execute it alongside the day trading trend, which is great because that's what we want to do. So this is like you threw a dart at the dartboard and it didn't hit. All right, on to the next dart, because we have darts that we can throw, and you're only going to hit the bullseye if you throw a dart, right? You have to play the game to win. So now you see price heading up into these higher price points, like 43.75. Oh, it goes up there. You see this reaction. Okay, you enter a position on initial tap. Okay, at times I've mentioned that you can do that if you have higher conviction and it's the right level. But oftentimes you'll get a double top or price revisit that area several times, and you'll notice what that ceiling ends up being, where price starts rejecting. So from that price point, you just want to give yourself enough breathing room. In this case, from my entry, let's say it's 43.70, then you'd have a $15, $16, 150, 160 point stop loss, and then your downside is 1 to 6, right? So if you're talking about in lots, you're risking one standard lot, this would be a $1,500 risk, and then you'd be making 4 times that for a moderate risk reward, right? Because you still want to be realistic, you want to be taking profits, but this would be a nice setup for leading into CPI, right? So if we see this setup leading into CPI, and you see the market setting up here before, and then we get that push down, guess what might happen if markets are over here and then we get a hotter CPI? Guess what will happen then? Oh, we'll start continuing down and we'll get that continuation of that hawkish repricing. But if CPI doesn't even come out as high as the minimum expectation, let's say it comes out at 3.9 or even 4, which is still lower than the minimum, then we might even see gold even push short term towards the upside, right? Before getting further sellers jumping back in, right? Maybe at higher price point. But the main point is that you want to position yourself leading into these events, right? Or wait until you have more information. So on gold side, if we pushed up into here and the markets are expecting a hotter print, and you know where sellers are going to jump in here or likely to jump in, you enter a short, maybe, just like how in NFP, we positioned ourselves from Thursday on these sells, right? And then when NFP happened, we were in profit already from the previous day. So we were positioned before that event took place. And it's the same principle here, is that if this ends up happening over the intraday period, or maybe even from up here, and that you could just be positioned leading into CPI. And that gives you a much better opportunity to play both sides in terms of where if you're in shorts here, now you could go risk-free before CPI. And even if CPI comes up cooler than the markets are expecting, and you get break-even stop loss before attempting a further short, right? So that's what the main focus here is, that giving your trade enough breathing room on the intraday period, because these moves happen at large. Like you can see a retracement from these lows, this double bottom over here led to gold going from 44.24 to 4,500, right? 4,500. So that's a massive move towards the upside. That's 1,000 pips. So what's likely to happen here? Maybe we'll get something of the same magnitude. Pushing into here would be about 800 pips. Pushing into here would be 1,000 pips. And that's a normal pullback on gold. That's just 50% of this move. Up here, it's just 50%. How many times does gold pull back like 68% or 70% of the move? So many times. 70% of this downside move was corrected right here.
Yep.
Right.
Yeah. Gotta take the pullbacks. Can't take the breakdowns. Great breakdown on that. No.
Yeah, thanks, man.
Absolutely.
Thanks, man. So now when we go into the lower time frame, again, I'm not, and let's say you're an impatient trader and you're looking at this, you're like, oh, I gotta get into these sells, man. I'm itching. I need to make some money. It's a Monday. Chill out, man. You know, like let's just go for a walk. As soon as you start feeling like
eager, like I need to take it.
Yeah. As soon as you start feeling like a crackhead in the markets, take a break. Walk away from the screen, you know.
Just one more trade.
Yeah, go outside. But so I'm more focused on these intraday plays. Let's say that doesn't happen and gold just pushes down from here. Boo-hoo. We'll just wait for the next opportunity. We have big data this week, CPI, and that's what our main focus is.
Yeah.
So should we do a little sneak peek here?
Bro, let's do it, man. You guys be excited, dude. Every update, it's like, yo, here's a sneak peek, and it just tops the last one. This one, oh my goodness.
Yeah. So this is gonna be cool, guys. Like basically, what we have built is your very own market assistant, your very own market assistant that lives inside the terminal and can actually use the terminal to give you data in a format that's not like ChatGPT, that's not like any of these other platforms, how they implemented the AI chat. It's curated. It calls our internal tools and it's grounded in data that we know we have, historical data we have, and that we have trained our models on. So it's very much grounded in real-time information. So when you ask it questions like, hey, what happened on gold on Friday, it's able to give you a full curated UI on what actually took place. And this is what I'm talking about. So I asked it what happened on the 30-minute XAU USD candle at 8:30 on Friday. Oh, and we just went out of service. So let me just get that back up because this is a test environment over here. Let me get that back. This is the best thing. I'm going to leave it here actually for a second. This is the best thing because shit breaks all the time and you can't always expect it to go right. But give me 2 seconds and we're going to get it back. Kevin, you want to share your screen?
Bro, we're having some technical difficulties. I got you, man. You go fix that up. Guys, great stuff. Really, we promise the update's better than that. No, it's cool, man.
Since I was doing this on a test environment,
yeah,
I had just closed the terminal for it, so just getting it back running. But
for sure,
gold is actually pushing down currently in the lower time frame. But here is my screen running still.
Yeah, you ready?
Okay. Well, I just want to go over gold. So gold over here is now approaching this lower time frame area, right? If we're going to see that downside, you're gonna need to see a break of this area holding below here, and then also holding below 4307. Otherwise, I would again just love to see a continuation up here, and then leading further into here. And we're getting some headlines: peaceful diplomacy over violence. Wow, thanks, brother. Thank you so much.
What else will we do with that headline?
Low transit numbers seen in Hormuz Strait zone June 5th to 7th with 8 total vessels.
Wow, we got 100 barrels of oil hitting the world. Guys, that's supply. That's supply, like we mentioned.
Yeah.
Eight ships moving in how long? In 2-3 days. June 5th, 6th, and 7th, 3 days. We had 8 total vessels moving. I mean, Nil, do you happen to know, like, what's the normal? You know, how many vessels do we usually move per day?
I'm not sure, Kevin. It's a lot of times they're also just getting by and not being reported, right? So this number isn't always accurate. There's some of them are spoofing their location as well. So there's not an accurate number, and you can see it's like, okay, this source is saying there's 300 vessels moving through. Some sources are saying it's completely blocked. Some saying it's lifted. You know what I mean? So it's not. I think the main focus is you don't even need to get that nitty gritty into it. We just need to focus on, hey, are there active escalations happening? How fresh are they, or how are they? So it's about 100 to 140 per day.
Yep. Now we're seeing 1 to 10.
1 to 10.
Talk about a hit.
Yeah, 1 to 10. That's 70 to 100 a week then.
Yeah. Talk about a hit to the supply.
Yeah. All right. So this is what I'm talking about. So you can ask it about any live news search. You can ask it to pull up one of the best. Let's do this one right here. So what happened on the 30-minute XAUUSD candle at 8:30 Eastern on Friday? And we can just click enter, and this is what it's going to break it down. So it's going to start thinking, it's going to start pulling information. It's going to return you text, but then you can see it says preparing candle analysis. And then it gives you a full breakdown of the actual thing that actually took place over here. It shows you the technicals that happened right from 8:30, in this case, which was the NFP, hot US boosted yields and dollar pressuring gold. Non-farm payrolls beat consensus sharply, reinforcing a stronger for longer Fed narrative, right? And then we also had escalations take place there, but then the main thing being NFP and US interest rate futures raise odds of December rate hike after jobs data. So you can see how this is it's not a text breakdown, it's a full breakdown using our toolings that we have built. So you can ask it for Iran-US escalations over the past 7 days, and it will return you a complete list of, you can see the escalation spiked hard on Saturday, June 7th, when Iran launched missiles at Israeli targets, threatening US bases if Israel retaliates. And you can see the complete headlines now that are from this weekend that are talking about the escalations and a complete timeline. This is your financial market Jarvis. There's nothing that's been built like this in the financial market retail space. There's no platform who has done it like this, and we continue to be the one that thrives and pushes innovation forward in the retail trading community. So this is something that we have been working on, and we will be bringing out to all of our users very soon. Now I asked, what is moving gold right now? And look at all the headlines that it's returning me that's moving gold. You can ask it, what is the bias on gold right now? And it will return you the bias on gold. So if I ask it, and by the way, this is still in development. So keep in mind, we're going to test this. What is the day trading bias on XAUUSD? So let's wait till it comes with that. And gold over here is now reacting from that low, as we mentioned. Where did we go? So you can see we're still bearish on gold over here, and it tells you exactly. So this will be coming to every market users. You can look at the recent Fed headlines. So if you want to look at most market moving Fed headlines in the last 3 days, right? This is going to be released very, very soon. And during the past 3 days, we're dominated by Friday's blowout NFP report. Guys, come on. We're building innovative tech. We're building things that others haven't done. And this takes people who are so obsessed with the platform and making it better to be able to do these things. We're not vibe coding this shit. We're a team of traders who are marketers, who are engineers, who are fundamental analysis, who are amazing hosts of live shows. Like, that's who we are. And we're super passionate about what we're building. So you can even ask things of any nature. You can talk about economic events. It'll give you playbooks for how this impacts XAUUSD, how this impacts SPX, how this impacts NQ futures. Now tell me any other platform who is doing it like to this level. And this is where we shine, is we always stay ahead of the curve and we're always pushing forward. So I'm going to take the focus off of there. Let's get back into the markets. That was a quick, we got a little carried away. We started a lot going on, but this is great. The buys are still playing out here. Gold is still continuing. This is what I talked about, guys. Like, we would have to break those lows. Otherwise, we're going to continue up to these highs. And I would, again, love to see that 43.75. Yeah, man. It's we're building the best platform out there, and we just all got to spread the word.
Yes, sir. Yes, sir. Markets open in 7 minutes, ladies and gentlemen. I'd want to see this S&P break above that 74.80, head towards 75.11.
74.80s,
Yep.
And then 75.05 is my key level. 75.11s, I agree, that like entire area right here.
Yeah, that's I had the same 75.05. That was like Thursday low from May.
And I bet you it just perfectly aligns
with
FIB as well, right? Definitely, yeah, of course. So it's just like everything just works hand in hand, right?
Yep.
Yeah, man, it's gonna be exciting. It's gonna be exciting to release this. I'm very, very pumped to the possibilities are endless. Like, it's a full agent that we built that uses our tools. That's completely grounded in our tool set and all the data and all the workflows that we have built. And any other platform that has a chatbot, tell me who returns it. There's no platform that returns a proper UI. They just dump words onto your screen. And do you really want to deal with that? Do you want to pay money for a platform that just gives you like a 10 paragraph? Or do you want to actually see what is the playbook for CPI and you get delivered it, so you know exactly what to do when you're trading SPX or what are you trading Tesla?
Ask about oil. See what it says about oil.
You know what, Kevin? We're gonna leave that for another day.
All right, fine.
Let's
but guys, there's your sneak peek, man. What a freaking cool update. That is
the users coming back for more.
Dude, right? Just let me take another trade. Nah, let me get another market update.
Yeah. And man, I'm very excited. I was playing with it over the weekend. I was up until 4 a.m. on Sunday just working on it. And it's just like, yeah, I'm just very excited to bring it out. With market finding having is correct bias, correct, incorrect, just early entries or exhausting trading attempts for the session before any moves. Any tips? Absolutely, bro. So a great thing to keep in mind is that you don't want to test if you're, it depends on what type of trader you are. Are you an intraday trader? Are you a scalper? Okay. Let's say you're an intraday trader. You have to keep in mind that doesn't matter if you're aligned with the trend. The market is only going to move when it has met the price point that it needs to meet, right? Sellers are going to jump in on gold from a very specific price point, right? Sellers that are going to drive us back down to these lows. It's not going to happen at every single level, right? So it's not going to happen here. It may not happen here. It may not happen here, but that doesn't mean that the bias has changed. It just means that we just need to wait for price action to develop. And you may be looking to take attempts here, or maybe you take an attempt here, right? And I've mentioned this before, that sometimes it just takes more than once or twice to position yourself correctly in the markets, which is fine. But your risk should still be good. Like, you shouldn't just be doubling down on each attempt to make the next one back, right? So in this case, I'm going to be looking to see if I can get a position here. So I'm going to go and see into the lower time frame, see how price action develops here, and whether we can get shorts or not. If this doesn't play out, great. I took the stop loss. The next place I'll be looking for is 43.75, which also aligns with structure, clean probability, nice psychological number, about 50% retracement of this move with a higher probability. And maybe this one ends up playing out. But let's say it doesn't. This one takes a loss too. And the next area we're watching is somewhere here, 4,400. And that plays out perfect. Now I just got it and I have a higher risk reward. Not only do I make back this loss, I make back this loss, this one, and boom, I have more profit to play with. So sometimes it is going to take you more than one attempt to get an entry right, which is fine because the point is that as long as you're aligned on the right side of the markets and the fundamental bias, you have the higher probability of increasing your probabilities of winning. Price will also increase, sir. I don't know
like what that means. I think he's asking, like, with the update with that market AI companion, is price going to increase for market?
No.
Nice. Look at that, man. Updates with the same price and get out of town. Yeah. What other company does that?
We're coming out with a higher tier. The higher tier will have unlimited usage. Our base tier right now will have limited usage of it. So that's how we're going to price this. It is a very powerful feature set, and we have so much more powerful stuff coming for the higher tiers for our users. But what we're really going to do is give access to our current users. When we come out with this new feature set at a higher tier, we're going to give our users access to it for like a few weeks to a month, just so they can play around, give us that feedback. We'd love to hear what they say. And then if they decide to keep it, perfect, they can go on to a higher plan. If they don't, no worries, they'll just be back down to like the base plan that they were previously using. So, which is still going to be everything that we have right now. So it's lots of stuff coming and amazing changes, great features like that. We're constantly pushing, we're constantly listening to our users. This was heavily requested across the board, but we wanted to do it right. We didn't want to give you another ChatGPT type feature that most of these. I love the cat, Kevin.
You know what he's gonna do? He's gonna mark out the cat levels for us today.
Yeah. He actually said, be careful up here, guys. We might get a push down on open. So keep that in mind, is that if we don't continue towards the upside, the next area we're watching is here, 75.05 to 11. Otherwise, this area, if this holds, we might get some sort of retracement towards the downside and push down to lower 7400s.
Awesome. Do we have a video and stuff? I know Seb is answering in the comments. Seb, thank you so much. I always appreciate the help.
So we have not released it yet. We are releasing it. We are publishing it this week. A few of our OG users, our lifetime users, people who have been around since the start of market, have had access to it for the past week. They've just been providing feedback to us. So it is just a handful of people. There's like 5-6 users that we give access to, and they have just gotten access to it and they've been loving it. So we'll be releasing this very soon, and we'll do a formal announcement. You'll see it on the platform. Okay. Like, you'll definitely see it when you come to the platform and you notice that, hey, wow, there's something sparkly here. Let me click this and it's going to be a trading view integration. So we're getting that ready for you guys, and we're going to launch it very, very soon.
Awesome. Guys, ding, ding, ding. New York session is open right there. Here's our... All right, let's see, guys. ES right away was rejecting near that 74.70 area. I still do want to see if price can chop its way higher, sort of trap people on, they say trap people on the wrong side. See if we get a bull move off the open, and then find that possible 10 o'clock reversal off of that 75.05, 75.11 on the ES.
Yep. So we'll keep that in mind. Yeah, this is great. This is 100 points for my entry, and fantastic trade, riding the relief from the repricing that happened over here. Yeah, exactly. You just need to wait for your optimal entry, try again. Yeah, exactly. Multiple attempts does not lower your should not lower your conviction, because at times it does take those multiple attempts.
Size
Right?
down too.
Yeah, size down too. Like I called it out on Friday, where on Thursday I had these buys. I took profit for majority of it, right? We came down to this area. I said, "Hey guys, I'm going to test out a buy here." I mentioned this on the stream. I'm like, I know the markets are pricing in a hot jobs report, and I took a loss on that. I took a short loss on that, which is completely fine, but it didn't change my bias. The next area I looked for buys was down here, because I knew once that gave in, next area we're headed is likely here. So then I looked for that buy. So I had taken a loss on Friday just to end the week right here, but that made that back instantly, and then more as well on taking this position from down here. So multiple attempts doesn't should not take your should not lower your conviction, because as long as you're aligned with the overall bias, with the overall trend, with what's happening on in geopolitically, macroeconomically, then you're going to have a higher probability of you winning. So on gold, that's exactly why we're waiting, and we're waiting for these higher price points, and that's why I said, hey, I'm not really looking to take shorts here. This doesn't interest me. We're in the middle of this range. The price point I would like to see this session is 43.50. Maybe we get some sort of retracement, correction, quick sell off from there. Or the higher price points have, of course, a higher probability of selling. Like I said, if you're looking to short something, you want to short it at a higher price, right? You don't want to be shorting gold at 44.25, 75 after it's dropped $200 since Friday. You want to short it after once it's retraced a bit and there's more room towards the downside for it to play out, right? And it's the same principle that we had in mind last week when we were talking about this move that took place.
Yep.
When we were talking about this intraday buy move, and we were over here talking about, hey, the probability is that we go towards the downside, because look at the range towards the downside. You're not going, where are you going to see buying into? Are you really going to see buying into this area with such a short range towards the upside? No, with the trend plus a higher probability that you're going to fill this range towards the downside here after you've gone minor relief on the intraday period. So that could go higher, and then you could see that sell-off happen that takes place later today, tomorrow, leading into CPI. So it's about being patient, testing specific price points. If you have written down that, hey, I'm going to execute or look for shorts at 43.50, at 43.75, at 4,400, then guess what? You're only going to look for shorts here. You're not going to try to short every minor 1 minute retracement like or this high over here. Maybe it plays out.
Right.
But I think long term, executing randomly when it's not in your plan for the day to do that, it doesn't have good consequences. Especially even if it plays out, it doesn't impact your trading in a beneficial manner for a long term.
No, always want to be able to do something that you can repeat.
There we go. So that's what we were talking about, right? On that post open, I'm like, hey, we might see that push down from this area right here. So great call out on exiting right there. I'm break even on this entry here. I'm expecting that this runner for me, this 10% of my position gets taken out, which I'm fine with, and I'm more than happy to let it go. But what this would give me then is then I would start to see how does price react here, right? Maybe we just push down for the time being down to 7400, 7412, and then we push up for the session. Maybe that's what happens. And then we end up pushing into this higher price point leading into CPI. So let's just continue to watch. But we talked about taking profit, and let's call that a very, very successful trade that was called out on market in the morning. I think I got the timestamp here. 1 second. Let me pull that timestamp up. It was on here. Sorry, Kevin. I'm just pulling up my.
Come on, bro. We got things to do.
All right, man. It was on 1 hour and 33 minutes. So if you want to go back to Friday's stream and look at that, you'll find that there. And on gold, again, we're just waiting for these 3 areas where we are looking to get those more higher conviction sells from.
Yep. Looks good. ES rejected off that 74 real quick, that 74.65 area that we mentioned off the
Yeah,
open.
yeah,
VIX
exactly.
started to spike. ES started to reject. Very nice little shorts there. I did not take it myself on that, just sort of waiting.
Yeah.
I do think with the right momentum here, we will make our way back towards 7,400. At that point, I would want to look for some type of breakdown, retest, and I would look for an entry somewhere over there.
Mm-hmm. Yeah, 100% agree. Yeah, brilliant plays across the board to start the week with the gold sell-off from overnight and then the buy relief today. Like this is just going to line up perfectly for the later half of this week to see that continuation in the sells. And that's the thing, is that we may not see that until leading into tomorrow or Wednesday when we have CPI.
Right, right. Yeah, we could go range bound, guys. Markets love trading in a range. They go range bound until we get CPI, dump, we get PPI, dump again. You know, and
Yeah,
markets come back
exactly.
to
So let's just take it, observe price, how price reacts. Let's not get stuck to too much of these things that we're talking about, how going range bound. Maybe we see markets just dump leading into CPI, right? So anything is possible, and we just gotta take it as it comes, honestly.
Yeah, absolutely. I think somebody was asking, what about oil? Do you want us to go over like oil price levels? Is that what you're looking for?
Mhm.
Cool, for sure, for sure. We could run some quick oil levels. Now, we know we mentioned earlier, right, that oil where it's trading right now, this is a major, in my opinion, a no trade zone. When we find extremes, right, that would be this blue level up here. Our highs around 103, our lows around 80. This is where we would look for trades. We would want to buy the lows or sell the highs. Everything else within the middle of this range, we would want to leave alone because we see the lack of continuation everywhere. Right? Fails to go lower, fails to move higher, fails to go lower, fails to move higher. On a smaller scale, right? Let's break it down to maybe an hourly. You know, it's a bit of an easier range to look at. Say, okay, well, here we had some support right here on this was Monday, June 1st. We held it as support Tuesday, June 2nd. We held it as support again Friday. That was this previous Friday. Here we are selling off to it again. So it'd really be 89.24 would be my line in the sand on oil today to say, okay, if we stay above 89.24, I'm still looking for longs. I'm looking for oil to remain higher for longer, looking for possible buys on oil to trade back to the top of the range. If we do fail that, I'd really consider it more of a no trade zone. You know, I would think that we would break it and start to consolidate. We could always look at our market terminal, right? That's so important that we look at our market terminal while we do our breakdown of our levels to make sure that we are on the right side of the trade. Perfect. Slightly bullish on swing trading, bullish on day trading. That gives me confidence again in this zone down here. Possible longs on oil. Does that mean it's definitely going to work out? No, but when you find different confluences, which is just confirmation on your trade, a zone lines up, your market pullback zone lines up there too, your market fundamentals show it lines up with the buys. That's how we want to make sure we're on the right side of the trend. Nolab, how would you use market for scalping?
Well, so you have to keep in mind, regardless if you're scalping or you're not, you should be taking trades that are aligned with the trend.
Yep.
Okay. So just because you're scalping doesn't mean that you necessarily have to catch every single move that the market comes. Like, you need to think about trading on a 30-year period. Are you looking to take the trades that are aligned with who you are 30 years down the line as a trader? If it's not, then you're just trading for the next day or the next week, right? And your next trade isn't going to be the one that makes you rich. It's over a long period of time. So when I look at market, let's say we're at the home, we see the bias on gold is bearish, but you see this pullback happening, right? This pullback came from this level over here. So we know that we're going to see this intraday pullback take place, which has already started. So as a scalper, I would not recommend riding the buys up from here you have to be very meticulous on where you take the entry. Like your buy entry would have to be down here. That's just like, yeah, exactly. That would be dopamine trading, right? You want to be looking to position yourself in the market. Doesn't matter if you're scalping or not. Now look at these setups that we called up here. Oops, not over here. Let's go. Trading View needs to fix this. Okay. Look at the setup we called over here. Okay. This setup was entered on the 1 minute time frame right over here. It was the short position was taken over here because this was our intraday area. And this was also a market level, one of the market levels from the previous days. And look how much we have played out since then. Although this was a scalp entry, like this was in the lower time frames, but your ranges are towards the downside are much more expansive and they're much bigger. So you can take this scalp and it can run hundreds of pips and it's completely aligned with the bias. So you want to be taking these positions that are aligned with the bias. When they're not, it's best that we just sit on our hands and let the market do its thing. Like if I'm a scalper, I'm not really looking to take scalps in the opposite end. I don't know where that selling is going to take place or where it's going to come from. Do I want to increase my probability of winning or do I want to decrease it? I know that increasing it happens when I'm aligned on the fundamental bias, on the technical trend. My probabilities of success don't get increased when I'm fighting against the market. Yes, you see an opportunity here, but is it worth taking? That's what you have to really think about, is which ones are worth taking. In my opinion, I personally don't want to take the breakout buys above here because I know sellers are dominating the gold market, and they have been. Sellers have been dominating the gold market since 5,400. Since the start of the war, we've been down, and market's been showing you guys a bearish bias since then. And any sort of pullback we get just eventually gets faded out, right? So scalping, you can scalp with the bias, and then when you're scalping with the bias, you take advantage of these monstrous moves, right? And then when you get this sort of play over here, let's start a new one, like this position that we called out as well, Kevin, on Monday, was it, or Tuesday? We called this on market in the morning once we got a break below here that, hey, and I took the short that we're going to get that continued downside. Now, when you have all these levels marked out, you can now scalp those levels because you know the market is ready to move towards a downside. You can take that entry over here. You can take the break of this zone over here, right? You can ride these down to the next level. You can take those shorts when they happen again at these areas and scalp those to the next level. It's about being aligned with the bias. Now, when you're aligned with it, you have a higher probability of these scalps playing out over here, right? Yep. Now you're given that information. Oh, okay. If we see a pullback to this area, now I can hold my scalps wherever I take them, right? I take them at all these breaks of these levels. You're scalping the markets. You're getting in and out. You're taking these breaks. You're taking these retest areas, lower highs. Now you're like, oh, I can hold it to my target level, to the intraday low, because now there's a higher probability since the sellers are in now from up here, from that area we were talking about on market in the morning. And guess what? Then every single dip and pullback on the lower time frame eventually gets sold. Yep. And then all of a sudden, you're back down to your intraday lows. And then same thing, rinse and repeat. You get that pullback, you get seller jump in, and now you're scalping all those levels all the way back down to your target area. And that's exactly what this is. Now, when we get this pullback completes, right? Now, when this pullback completes over here on gold, and let's say now we get this, remember this is what we were talking about, is that we were going to watch 4350s, and we came right to it, 4375, 4347. And now we've seen some sort of reaction here, but doesn't mean we're just going to push down, right? We could just come like a double top here and then push down, or just completely break above and go the higher probability areas of 4375. But now let's say that same thing happens again, and then you can start scalping breaks of this, enter sells on the retest, continuation towards the downside.
Yes, sir. Yes, sir. Know the entry go to 100%, bro.
No. Dude, I'm telling you, no one comes close in entry as Jeeve does. Like he is just way too precise on that. Like this guy had
He coded the market.
He had this short up here on SPX, right? And look at how massive that play was with the hot jobs report. It's just that's what I mean. It's about the positioning. It's about knowing that, hey, we have a jobs data coming. We're likely not going to break this until we get the data from it. And now look at that. We had the data and then boom. So
Yep.
Does U.S. oil and dollar share a strong inverse correlation? No. So if you look at dollar right now, dollar is pushing up and U.S. oil has been pushing up as well since the start of the war. These are U.S. oil is pushing up because of the tensions in the Middle East being the main focus, and dollar because dollar is a safe haven, right? Dollar's caught a bid since the start of the war. Dollar's been pushing up. It's been weighing on gold as well. So not necessarily. And sorry about leave that site. Now to get back on gold right here. Sorry, I have to keep looking at. Ladies and gents, let's get the likes up. Let's go.
That's it, bro. That's it. Run those likes up. But go back to what you're saying about oil and the dollar.
Yeah. So when we look at dollar over here, let me pull up dollar. I'll open up a new tab. Gold, I'm just going to be watching this sort of movement over here. So when I pull up dollar, now, and we just hide this for now.
That's so cool, bro. I can't wait for that.
You can see dollar caught a bid right at the start of the war. Right, dollar as a safe haven has been catching that bid since the start of the war. All these pullbacks have been getting faded out. Now, with the focus on a tighter policy, dollar's been maintaining that bid as well. Gold, oil, on the other hand, has been continuing to play its range of escalation, de-escalation, and whatever comes to play. And look at how we talked about this area, that this 60 area is going to get this 90s area is going to get that bounce. We had that again, that same sort of movement. Then this was from Friday's stream that we'd get something like this play out. Boom, we came up to here, gapped up over escalations, came back down. Now we're retesting this area, which if we hold, guess where we're going to end up going? Back up to 95 if we get the slightest bits of escalation take place. So this would be like one of your intraday areas of buying that if we get escalations, now you start seeing that confirmation and continuation of that structure holding on that intraday basis of that price action shifting in this case. But oil, the focus is on where is the price of oil currently. Now you can see every lower point when we reach this band of price on oil, that's exactly when we get heavy escalations in the war that actually impact markets. We had massive escalations over here. We had massive escalations here. We had big escalations here too. And then when we start pushing up back up into this area, we start getting those de-escalations because it puts stress on the world. So that's what you have to focus on for oil. Dollar, bid, safe haven, tighter Fed policy being priced in. That's why dollar's holding its bid. Oil, the price of oil is going to determine what state of the war we're currently in. We're seeing those escalations. Escalations got faded out with minor de-escalations. However, oil still being at these lows over here gives it a higher probability that we get a move towards the upside due to higher probability that we're going to see these escalations. We know escalations are likelier to happen at the lower price points of oil versus higher, because if we're up here and then you see escalations, oil is going to shoot up into 120s, and that's going to be pain.
Yeah.
That's going to be stress. Now, versus you have those de-escalations happen exactly as we start tapping into that pain. Right? So that's what we have to keep our eyes on and mind on right there. Gold is pushing down right here. So this is what we were talking about, this level, right? 50s. So keep this in mind. If this doesn't push down now and we continue to retest it and we break above, then that 75 is that sweet spot, in my opinion.
Yeah.
Either way could play out. It's all about that probabilities, right? Maybe you risk 1% here, and then on this trade you risk 1.5% because it's a higher probability. It's a better price point. Your conviction is still the same, right? And either way, you'd still take a win. You'd still catch that win. So it's about just knowing that, hey, these are the price points I'm looking at. This is my risk at this one because this is an A setup. This is a A plus setup, and this is your A plus plus short setup.
There we go.
Either way, as we were talking about, that 50s level, it wasn't this one that caused this reaction, right? So let's continue to monitor. Over here, we'll look at ES as well. Got that pullback since open, and then oil just at these lows over here, rebounding for the short term. If we start seeing like a double bottom or just price rebounding, creating a higher low, and then breaking above these, then you start to see a retracement back up to this, and then you take it as it comes, right?
Yep. Small headline: Saudi Arabia reports missile threat from Yemen near border as sirens sound.
Yeah.
What else we got? Anything else? Iran's Rizai says Strait of Hormuz belongs to Iran, and Oman vows to block foreign interference, which we do know that that's sort of the U.S.'s goal, and Trump's goal was to gain some type of control and at least get some type of almost like a kickback, like a commission of it, per se, right? Where he's like, oh,
he's a true businessman. He's a true businessman.
He's like, oh, it's part of the deal. Like, all right, buddy.
All right, buddy. Yeah. It's a self-interest, you know.
Yeah.
But Kevin, I have to hop off, unfortunately.
Oh, man.
I'll see you tomorrow.
Absolutely.
From my side, signing off. I'll let you handle it. But hope you have a good day. Just keep an eye out on our price points we talked about, and we'll catch up tomorrow.
Absolutely, bro. Thank you. Thank you for being here, guys. Dropping a like for Nalab. Nalab, you're the best. I will see you tomorrow. You got anything, hit me up.
Anytime. Take care.
Absolutely. Take care. Guys, we're going to keep the stream going for a little while, though. We're going to run it till 10:30. We got another 40 minutes there to make some more money here. Now, we see that we had the reaction to this level already from ES off of that 74.65 as soon as markets opened. VIX, on the other hand, has been trying to reverse back lower for the past 15 minutes. So I would not look to try to short this right here. If anything, remember, fundamentals haven't really changed. We are still a bit more bullish on the S&P and NASDAQ. I'd want to see if we can make our way back towards this zone and even break this area and head towards the next point that Nalab and I both had, 75.05 and 75.11. If we could get that squeeze, you'd possibly be looking for some longs on a retest of this zone, or even where we are right now with the stop at the low to target that next price level to the upside. Hopefully VIX can also get back to a more calmer state. Remember, VIX above 20 shows uncertainty in the market. Right now, VIX is trying to trade back below 19. It's at 1850 right now. Gives us some confidence in the longs. NASDAQ is also trying to hold up right here. NASDAQ did not break. Check this out. A little bit of divergence here. NASDAQ held this low from 8 o'clock. ES did not hold that low. ES broke that low. So a bit of divergence there, showing NASDAQ has a bit more strength. If you do take any longs, it'd probably be looking for NASDAQ over ES. And I'd want to make sure that equities like NVIDIA and Google are also trending in our favor, just to take a small move back up towards this 29,775. And it's funny because we call it a small move when in reality that's 260 points. You have to be aware of the range and volatility we're in, right? We had a 15, let's see, from 6 p.m. on Thursday to the low of Friday, we had a 1,600 point move on the NASDAQ. We are hitting volatility. We are hitting extremes, momentum. When we hit these big extremes, it's funny, some people, they're like, wow, that's awesome. I got to size up to make more money. It's the complete opposite. You have to size down to protect your capital, and even sizing down will give you that better chance of more money due to the higher volatility and then the opportunity to add to your winners. Now, I'm not taking any longs here. In my opinion, this is a more of a middle of nowhere opportunity where ES was running into resistance. NASDAQ doesn't have much resistance till 29,800. Traders just got stopped out to the downside. They might be trying to go along here to the upside. Middle of nowhere, no trade zone. Something we'd be a bit more interested in is possibly gold. Gold, I would look to see if we can create these lower highs, lower highs, lower high, lower high. I'm sorry, lower lows down here, and then lower highs up here. But I would still rather see gold give us a better sell opportunity. Like Nalab said, you could try to take some shorts here with that recent high being your stop loss. That's your invalidation level. Your stop loss should always be where your trade setup is invalidated. If I'm short right here, where do buyers officially take control? Well, that's going to be at a recent higher, lower high. Okay, so then if I take my entry here, my target would be new lower low. My stop loss would be the lower high. That right there, you're looking at a 4-to-1 risk to reward. It stops you out. That's fine. You wait for your next entry. And guess what? That's most likely going to set us up with a higher conviction setup. Like Nalab said, we could take a bit of a higher risk tolerance on this trade and take it from there. At this point, though, we'd be a bit more interested in what's going on right now. And right now, what we're getting is these lower highs and lower lows. That is our current trend on gold. We could also take a look at the dollar and make sure dollar is showing some strength. Strong dollar will help give us conviction on a weaker gold. Daily time frame, dollar is definitely trying its best to find some momentum, but take a look at this range right here. We're going to grab our rectangle tool, drag it out. Look at this major key level, even all the way over here. You guys just watched me map that out live, right? We mapped it out from recent price action, dragged it out to the left. This has been a key area for quite some time. Look at that. It keeps going. Major area, and that's right off the key psych level, 100, 100 even, 100.21 to 161. So that's our main area on the dollar. Now, if we can break, and it's important to go over the dollar if you're a gold trader too, because that also gives you some extra insight. If we can break above this level on the dollar and close somewhere with it with momentum, then guess what? This area becomes our support, and we can expect even stronger, even more momentum, even more driving factors, even more outflows on gold. But until that happens, this is still our main high over here. Let's see, we can do all. This is still our massive high. So this is our extreme that has been a ceiling on the dollar. Well, if it's been a ceiling on the dollar, it's going to have an impact on gold. But if we could break through it, then we know gold has a good chance. Right now, gold is struggling. We had such a beautiful down move yesterday and the day, Friday and Thursday. At this point, really just a matter of being patient. Look at that, guys. Exactly why we don't just take random middle of nowhere trades. Those longs would have failed. So be patient, wait for your setup opportunity, and trade with the fundamental bias. Do not force anything. We just got a headline right there. We could see if it's anything of importance. U.S. deepens role in Israel-Iran tensions. CENTCOM reportedly supplied intel air defense cord per Hayom. Okay, well, what's this headline mean? What more does this mean other than U.S. deepens role in Israel-Iran tensions? Because we already know this. That's nothing new to us. But what does the rest mean? We could hit the brain icon. Headline signals deeper direct U.S. operational involvement in Israel-Iran conflicts, raising tail risks of broader regional conflict and energy supply disruption. So there we go, guys. Energy and supply disruption. Let's take a look at our oil that we were looking for longs off of this area, and it's already starting to hold right before that zone. So I'm not taking anything on oil until we hit that zone. I'm interested in our predetermined price levels. You should always give yourself an opportunity in the pre-market before you trade. It's a pre-trade setup. You want to give yourself the chance to say, okay, I'm trading oil today. Let me start on the daily time frame. Where are we? Where's the momentum? Do we have any volume? What's going on? 4 hour. Again, it's still a higher time frame, but it breaks down the daily. It's a 4 hour time frame. Gives you, what is that? 3, 6, 12, 6 4-hour candles, probably more than that, like 8 4-hour candles in a single daily time frame. Okay, great. So it's almost like taking a magnifying glass to your daily time frame. Now we can come down to the hourly. Same thing. What we're doing is we're finding those key areas that price has found support and resistance. You see right over here was an area of resistance. And when we drag it out, it was support when we're above it, resistance when we're below it. We could even drag it down a little bit too, so it matches up right over there. Look at that. So there we go. We have our key levels on oil. Can you check GDP USD and Euro USD? We could run that down, of course. Absolutely. Absolutely. So let's bring up our market terminal. Let's find our GDP USD. Let's do add GDP. You down with OPP? Yeah, you know me. USD. GDP USD. Why am I drawing a blank on this? Watch list stocks, futures, Forex. GDP. GBP. That's why, Seb, it's not coming up, because I'm not putting it incorrectly. Awesome, guys. Listen, man, that's, you know what? Again, community and why market is such a great terminal. GBP, not something that I trade, right? GDP is the reading. GBP, ceasefire hopes trim USD safety bid, but hawkish Fed still dominates. No, bro, I just don't trade Forex. I trade futures, man. But let's see what's going on. What's giving us our bias right now? We have day trading slightly bearish, swing trading slightly bearish. The great Danish pound, bro. That's hilarious. Nah, bro, I'm just used to the that's it, bro. That's it, man. Thank you, Nick. W's to Nick. Somebody get Nick a winning trade. What supports the bias on GBP, right? So strong U.S. non-farm payrolls and revisions reinforce Fed hawkish repricing. U.S. rate futures price higher odds of December hike. These are all strong bearish sentiments on the GBP, right? So strong U.S. ADP job beats lifts USD into non-farm payroll window. Persistent Middle East tension still supports residual USD safe haven demand. So that also is giving some safe haven demand on the USD. And US weekly jobs claims seen low, reinforcing US outperformance narrative. If you take a look at our levels here, let's open up our chart here on market. And we could also turn off the labels for a moment, right? Let's see a cleaner view. On the hourly time frame, where are we? Well, we have our pullback area, 1.355. Now, in my opinion, I'd be a bit more interested in these more recent zones, like 1.34. This is a much stronger area that price has reacted to in the past. Right now, it seems like we're basing out, look at this, near that other area of consolidation, 1.33. This is where we held support before. Guess what? We came right into it. We held support again. So at this point, it's still a slightly bearish bias, but what is price doing? It's giving us that pullback. We take a look at GBP, USD. Same thing. We see it here. We had that support down here. That's where we started to hold. You could even mark that out with a bit more strength. Mark out the whole area, right? We want to mark out, this is our demand. Demand on GBP. And where's our resistance? Last area that price was seen as resistance as it failed to continue higher, that's going to be right here. So short time frame wise, short term, I would look to see if we can come back to the top of this range, right? We're not looking for a big breakout. We're not looking for the next huge move. We're just looking for price to return back to the range. If you're not looking for the longs, now remember, we want to trade with the overall bias. The bias is still more bearish. So instead of looking for us to come all the way back up here for a short, what I might also be interested in seeing is if we could break this support area. If we break this support area, the next point of consolidation that was our other support is going to be down over here. I'm going to mark that out, demand. That's going to be right over there, right? This is where price also consolidated before giving us a very strong move. Well, then great. If we could break below 133, we're going to target 132. So that would be our levels and analysis on the GBP. Hope you guys enjoyed that. Euro USD, we could check that out as well. We could take one quick look, though. I do want to see what's going on ES and NQ, if they've given us anything of interest, and they really haven't. We had the strong move up into our supply zone up here. This did give us a good short opportunity right off the open. Since then, we pulled back, created another lower high, broke lower, created another lower low, and VIX is also still trying to make its way back higher. It is failing to move any lower on the VIX. Again, giving me a signal that, hey, listen, sellers are still heavy in these markets. If I was looking for shorts on ES, I'd take a look at some higher time frames. 15-minute, 30-minute, hourly, and just make sure everything still lines up the same. Hourly gave us a beautiful sell candle right there. 4-hour time frame closed at 10 a.m. Eastern for futures. Well, look at that 4 o'clock candle that we had from 6 a.m. to 10 a.m. Huge rejection candle. Looks like we are in for another down move. And we have to remember too, look at the momentum we had yesterday. Follow the trend. Trend is our friend. Yeah, nice gold calls were a banger. Let's take a look. Yeah, look at that gold short starting to play out from that level. Stops at that recent high are still holding. Moving lower on gold. Want to see the dollar also trying to move higher here too, supporting that bearish gold thesis. So yeah, very nice there. Gold has really been the go-to lately on these market shows the past week. I will say though, last week, Monday through Wednesday, we had some phenomenal call-outs on ES and NQ. Now, ES trying to climb back higher. Take a look at NASDAQ. Like I mentioned, NASDAQ has a bit more strength right now. It finally was able to take out that recent low, but it's right back up again, another 80 points off of those lows. Be patient, be careful, trade your levels. Now, I'm a big fan, guys, when I'm trading ES or NQ, of using the VIX for confirmation on the trend and also using this bottom chart. What this bottom chart is it's a combination ticker. It's Apple plus Microsoft plus Nvidia plus Google. 4 of the top 10 and top 5 holdings of the NASDAQ and also S&P all combined into one chart. So if I see that, hey, look at this. Our weighted index, these tickers are trading very bearish to the downside, but NASDAQ is somewhat trying to hold, well, then I'm going to be extra patient. I'm not going to take a long on NASDAQ, knowing that our equities are still signaling weakness. Now, this is very helpful if you don't have multiple monitors. If you do have another set of monitors, what I like to do too is just have another window with my equities open. Gold continuing down, trying to break lower here. Again, higher time frame, 15-minute gave us a beautiful rejection candle right there. We had our supply. We moved lower. Targets on gold are going to be new low of day, which is at 42.93. 42.93 on the gold shorts as a price target. I just had another headline there. Let's take a look at our market terminal, see if it's anything of value. Siren sound in northern Israel near Lebanon border. Nothing major right there, right? Now, it's nothing major, but it could be a buildup. If things really start to escalate to a extreme, right? Markets are always looking for extremes. They don't look for, oh, is this a final deal? If I look up the word final right here, you know how many headlines are going to come up about a final deal being in the works? So many. Hopefully we get our market AI buddy to be able to figure out how many headlines mention the word final. And it could be like, there are 5,000 headlines in the past month that mention the word final. Trump says Israel-Iran seeks immediate ceasefire, right? This was 3 hours ago. Meanwhile, we're hearing sirens in a possible deepening attack. So these headlines are give or take. They're give and take, really. And they're really not giving or taking anything. They're giving a whole lot of noise, a whole lot of airtime, and no reaction because there's no follow through. At this point, markets are not taking these big headlines as the make or break. They're seeing these headlines as, all right, whatever, sure, we're in a final deal. Of course we are. What else is new? The ceasefire was our last catalyst that gave us a reversal on ES and NQ, and that was the ceasefire down over here at our 10% level, reversed 20% to the upside. Now we had our big sell candle on Friday, and what's cool too with market is we could come over to our ES, and we could see, okay, where was our big sell-off? That was right over here. What triggered the sell-off? Let me just hit any candle in between there. Continuation sell-off as hot U.S. jobs data fuels hawkish Fed repricing. There we go. Now I know what moved this move. Is this strong enough to be a catalyst and give us continuation? Yes. If it was just hot jobs, it could give us an intraday move. But the fact that it fuels hawkish Fed repricing, this is the nail in the coffin on the possible reversal. This is the possible catalyst that we talk about all the time in markets to reverse direction. In my opinion, the two main things we want to look for going forward to know if this is a real reversal is primarily going to be the VIX, but also going to be just overall fundamentals and how CPI comes out this week. Right now, we could take a look at our economic calendar. CPI is Wednesday. So here's Wednesday, 8:30. And look at this. Forecast is 4.2% on CPI inflation. That is over double what the Fed's target price was. The Fed's target for inflation is 2%. We went from 2.4% in February all the way, look at this, 2.4%. And I'm sorry, in March. March was at 2.4%. April, it flew to 3.3 because of the Iran escalation. Then March continued 3.8% above the forecast of 3.7. Now comes the question. Do we beat forecast again on CPI, come in at 4.3%, and the Fed loses their mind, and interest rate hikes are on the table? People start panicking. Headlines start flaring red signals all over the place. Yeah, they're already expecting a spike. Yup, you know it, bro. You know it, man. This is going to be big. This week is really going to give us some follow-through and clarity into the general trend of the market. Right now, we have to remember, yes, that was a big sell-off yesterday. Yes, percent-wise, that could be one of our key signs that we're going to start to reverse. We did hit 5% from those all-time highs from the NASDAQ, not on the ES, only 3%. 5% would bring us down to, let's see, 5% brings us to, look at that. Wow, guys, look at that. Whole key psychological level, 7250. 7250 is our 5% mark. We're going to label it, going to write text 5%, and we're going to keep a very close eye on that. That's our 5%. This is our 10%. Let's move that down a little bit. So again, we break below 5%, we're breaking beyond pullback territory. Once we hit 10%, we're hitting a bit more of a correction territory. 20% is where it's considered more of a market crash. So on a long-term portfolio-wise, if you're a swing trader, you're somebody that buys and invests, that 10% area is your prime spot to start allocating into the market and buying and starting that portfolio. Buy the dip opportunity. 20%, that's where you start adding as well. Not where you get out, where you buy, right? Markets have never seen major reversals and never made their way back to all-time highs again. Even over here, this is our COVID crash. We sold off, look at that, high to low, 30%. But what did we end up doing afterwards? Came all the way back up 45%. We have to remember that we're not here investing-wise to buy the highs and sell the lows. We're here to buy the lows and sell the highs. From a day trader narrative, though, these levels can work to give us an idea of the momentum in the market. If we do break below that 5%, we know there's going to be extra panic. If we break below that 5%, and VIX is above $20, above $22, we know that there's extreme panic and selling pressure and options activity. That means big hedge funds are also positioning themselves for continuation. That is the bread and butter. That is when all the dominoes, all the pieces come together, all the dominoes start to fall apart. And what's really important too, again, is the jobs data. That came out Friday. That's starting to wobble. Now we're getting inflation data. Next month's jobs is also going to be just as important. All these reports really are very important. It all matters, though, too, how it impacts the Fed. Let's see, hourly time frame, 15-minute time frame. Just a lot of chop here on the ES. Gold, slowly trying to continue lower. I would not look at this and be like, oh yeah, I should buy this right here. No, of course we could fall back. Yeah, new Fed chair, FOMC next week. So many big factors coming up that could reverse markets from these highs. Bro, it's going to be such a good market TV show, man. New Fed chairman. Oh, yeah, of course. New Fed chair, FOMC. We usually run these market in the morning shows Monday through Friday, not 8:20 to 10:30. Guess what? FOMC meeting 2 o'clock, 2:30. We're going to be covering it here on Market TV as well. So make sure you guys tune in. I'll be sure to be live. I'll have the stream running of the Fed speaking as well. This is Mr. Kevin Warsh's first meeting here. Yes, sir. Let's go. Let's go. Let's go. Now, what I also would want to do is I want to hit newsfeed. I want to come to my breaking news, and I actually want to come up to not search symbol, but I want to look up my search button over here. Instead of final, I want to look up Warsh, and I want to see ahead of the FOMC meeting, has he said anything to give us some insight into bullish or bearish cuts or hikes? All right, well, one day ago, Fed Reserve faces new scrutiny on independence. Okay, that's not the best sign. Trump will leave rate cut to Warsh during October meeting. Sitting president openly delegating Fed cut decisions to Warsh implies politicized early cuts, moving bonds, dollar, and equities. U.S. jobs report strikes a hawkish note as Fed Warsh takes the baton. That's pretty funny. Fed caution on inflation as Warsh prepares chair first policy meeting, just like we're talking about right now. Fed Warsh inherits economy increasingly squeezed by inflation. They hit the brain icon. Okay, well, let's break that down a little bit. It's going to give us a quick little brief. The headline signals a Fed led by Warsh facing persistent inflation, implying a bias towards tighter or longer-lasting restrictive policy. Markets would price higher for longer rates, pressuring U.S. equities and treasuries, supporting USD, and modestly favoring gold as a hedge. Just modestly. Remember, if it's supporting USD, usually gold will have that inverse reaction to it. Risk assets may stay volatile amid geopolitical and supply-side inflation risks. Anything else? This is 9 days ago, 4 days ago. Let's see. U.S. naval blockade of Iranian ports remain active despite Trump posts. It's funny. Warships ordering, because we looked up Warsh, came up with warships. That's great. Bessent says Trump decided on Warsh as Fed chair. Okay, we knew this. Okay, so nothing really, right? We went through the headlines. It really does just signal to us that they're mainly going to be looking at higher for longer rates or even the possibility of a rate hike. But there is still, of course, Trump trying to butt in and make his stance. But we have to remember, guys, as traders, as investors, if you're in the U.S. as a U.S. citizen, that the Fed should be completely separate from politics and the government and Trump, right? They are completely separate. There should be no politics telling or Trump saying, hey, Warsh, I need you to cut rates this meeting. No. Fed is completely independent. That's why it's called the independent Fed, right? I didn't know I wanted market in the morning for 2 hours until it was given to me. Thank you, Kev, Jeeve, and the market team. Absolutely, for always improving and providing invaluable information. Dude, it is our pleasure. Yeah, and absolutely, guys, if you are new in here, sign up for Market AI today. You could find it at marketedge.ai. You could use discount code KEV. We'll save you 10% off. Best discount we have available at the moment. We have a newsletter you could sign up for free as well. We have our homies on the back end send out great information there. And of course, follow us on social media. The Instagram was taken down, so follow and show support to our new Instagram handle is marketai.insights. So definitely take a look at that. Seb, if you don't mind, throw that in the comments there and I'll post it up on the stream. But let's see. What else are we looking at? Right, I wanted to show you guys real quick. If you haven't seen from last time, we now have our Market TV section over here. And if we're live, it tells you we're live. Here's Market TV. And hey, I know that guy. That's the guy that's talking to you guys right now. Market TV. You could look at what Bloomberg is doing if they're live. Yahoo Finance, Reuters, Schwab, the Fed Reserve when they have the meeting on next Wednesday. Yeah, it's XAU USD being trashy today. I see that. I get that. And what's cool too, guys, is we have all of our replays down here. We have trade prep for the week, updates to new features, anything from our YouTube channel that helps support you guys in an educational format. And not only that, you could be watching the stream and then you could go over to your dashboard and look at that. Your stream is still there. You could move your stream over. You could do your own analysis, break it down while you listen to what we have to say, or you have another channel running too as well. That's great as well. Very helpful. We're looking to give you guys the most insightful and helpful platform out there. Really replace any type of competition that's a pay-for company that doesn't give you proper insights, right? We want to give you the right information, the right headlines, and the right fundamental bias. Take a look at our equities. Take a look at our gold. Gold really giving us a whole lot of chop right now. Very little continuation. But something to note, guys, here on this pullback, we see we have two green candles, right? But I want to point something out. A lot of people, their first thought, let me look at the candles. Oh, wow, we're pulling back. Buyers are stepping in. You guys are missing a whole piece of the puzzle. Look at the volume down here. When we had sellers, volume was high. But when buyers step back in, look how low the volume is. Look at that decline in volume. What that tells me from a trader perspective is that sellers are active because we have stronger outflows. There is selling pressure. But when buyers step in, all those buyers are doing is most likely taking profit or repositioning. They are not coming in to reverse because they're not coming in with enough volume to give us that reversal. So I would still look to see gold continue lower. And listen, guys, it could chop down lower all day. It could take time. It could take an hour, 2 hours. Be patient. If you're in the trade from where we called out earlier, 43.60 on GC, your stop was 43.77. You're letting it play out today. ES also. ES very sideways price action. Look at this, guys. Unless you caught the short off the open, you would have been stopped out left and right. You would have tried some shorts over here. Oh, we're continuing lower. Boom, I got stopped out. Wow, I got stopped out. Buyers are stepping in. Let me try a long position. Immediately stopped out. Oh, I knew I was right the whole time. Let me try a short again. You guessed it. You're chasing. You just took 3, 4 wrong trades because you're chasing markets that don't require and aren't calling for you to chase because it's not trending. You're just blowing an account on a range-bound day, and that is poor risk management and poor trading. That's why, like we mentioned, it's important to do your pre-market and pre-trade analysis so you have your zones prepared. We had this red zone prepared today. I had this marked out for you guys by 8:30. I showed you guys the zone at the 74.64 to 74.78. You could have taken that short. Sure, great. If you did, that was the only trade opportunity today. $1 is at 100. The USD is at 100. Let's see. XAU USD, yeah, getting close to that $100 mark. Yep, I will keep the sell till 4,300. There you go, bro. Hold those shorts. I don't promise, you can't promise anything in the markets, but gold has definitely been in a stronger downtrend lately versus ES that has really been struggling to find continuation to the upside. And one of the main reasons ES is struggling to find that continuation has to do with the data that's coming out. Our first clue that we were running out of steam on this rally was when we had CPI right over here. This is May CPI, came out way higher than expected, very bearish for the economy. We pulled back. Since then, we did have a small rally. Look, we had 1, 2, 3. We had 8 bars in a row, all of which breaking higher, closing green, breaking higher, closing green, breaking higher, closing green. But actually take a look at those candles on a non-biased narrative and say, but look at all these wicks. Wicks to the upside, wicks to the downside, and look at the bodies. The bodies of these candles are extremely small. The ranges in these candles, we're getting 28-point ranges. Yesterday, we had a 180 to 200 point sell-off on the ES. That's momentum. That momentum matched with volume, matched with economic data that helped support this to the downside is the type of catalyst we look for. In my opinion, and I'll call it right here today, and listen, guys, I could be dead wrong, but I do think markets are going to start to turn around back to the downside again to give us better buying opportunities. If not, I do think we could be a bit more range bound, but CPI is really going to give us the insight. And then next week we have FOMC as well, but we did break some crucial levels. If we get below 73.50 on ES, same thing, very bearish. We get back above $20 on VIX, very bearish. Just looking for the signs. We always want to look for signs in the market. A headline: Israeli military says siren sounding in Zarit area following launch into southern Lebanon area where forces are operating. So again, it's like ceasefire who? I didn't ceasefire. Did you ceasefire? You didn't ceasefire. Did they ceasefire? But we'll let it play out, man. Just got to let it do its thing. Dollar currently rejecting that key psych point, that $100 even. You can mark that out with the trend line tool so you have it on your chart. $100 is, of course, a key level. There's no doubt about it. You don't need to find it on the chart to know that it is a key area. Let's see. There we go. Nice. Pulled it back. Look at that. We just marked it out. I was zoomed in over here, just marking it out as our key psych level. Then what did we do? We zoomed out on the chart. What do we see? We see the dollar respecting this $100 mark as support, or now it's resistance. I'd want to see a strong break above 100 and a pullback towards 100 to find support to help confirm gold back to the downside for continuation. If the dollar fails and it continues on lower from this $100 point, then I would honestly be a bit more interested in possibly stopping out of gold and letting the day play out and coming back tomorrow, guys. There is no harm in taking the day as break even or recognizing price action isn't in your favor and calling it a day. That's proper risk management. The difference between proper traders and improper traders, inconsistent traders, is how they manage their losses and their ability to recognize when days are trading in their favor. Right now, still looking at the ES 5-minute time frame, it's 10:30. Markets have been open for an hour. We have gone nowhere today. Markets gave us that massive drop on Friday. Today, for the first hour of New York session, we have gone nowhere, and volume has been on a steady decline. What does this tell me? Well, it tells me that we're probably going to wrap up market in the morning in the next 5 minutes or so, and then markets are going to continue in our favor to the downside. I'm just kidding. But what that tells me as a trader right now is I do not want to take any trades. If you take a long position here, I can almost guarantee it moves somewhat in your favor and then stops you out. You take a short position here thinking that, oh, well, you know what, we're going to create these lower highs. That might have some more strength to it, but let's be honest and let's be realistic. We want to be realistic with markets. It is most likely just going to chop back higher again and then possibly reject this resistance point. So guess what we can do as active and smart traders? We could wait for this area that has proven to be resistance once, twice, 3 times, including the New York Open, to again be a resistance point. So this is the only area I would consider trades on the S&P 500 today, is shorts off 74.64. Other than that, this is an extreme range, an extreme chop, and an extreme reason to not take any trades or force anything. Let's see. Let's take a look at the NASDAQ. NASDAQ. Let's see. Looks like NASDAQ, same situation where a little bit of a different situation. Whereas ES had that resistance point right up where New York session rejected off the open. But look at the NASDAQ. NASDAQ has no resistance here, has no support here. is a true definition of a do not trade zone. This is a do not trade zone, middle of nowhere area. We leave these markets alone right here. Hourly time frame is back and forth too. We had this major sell-off, made lower lows, lower highs. I would want to see NASDAQ pull back towards this, like we mentioned earlier, 2980. I'm sorry, 29,800 for shorts to give us some continuation back to the downside. Economic data is starting to signal more bearish. The headlines are signaling more bearish. The Fed hike expectations, that's also a signal to be more bearish. There are, sorry for the flashbang on the bright screen there. There are many reasons that now we're starting to see more bearish and outflow in the economy and in the stock market right now. So be aware of that. Guys, join us every day here in the Market in the Morning show. That is on our Market TV platform, on our Market AI terminal, here on YouTube, here on Twitter as well. Please make sure you run that like button up. That's all we ask of you guys, is a little bit of engagement in the comment section and to run the like button up. Our goal is at least 50 likes to keep it going. And again, we'll do this every single day for you guys. It is Monday, first day of the week. You got to remember that too. If we're trading in the middle of nowhere, we're not finding any support or resistance. We're not finding a clear trend. Guess what? There's always tomorrow. The market is not trading, is not something where it's like, here's your cut salary, here's your set salary. Trading is about opportunities. I'm impressed that Kevin never stops dropping market knowledge and info. I appreciate that, man. Unlike other streamers who slack off, Kevin's 100% goated. He even wears the same shirt every single stream. 100% respect. Dude, I appreciate that. I do swap it up, though. I got a couple of these white ones. I got the light blue one from last week, too. But I'm always happy, man. Always happy to go over some levels, drop some knowledge for you, drop the fire, man. I got into the market about 6-7 years ago. And I just spent so much time the first year, just book after book, YouTube Academy, where it's just video after video. It wasn't until I found a mentor, I found some clarity and strong guidance, that I was able to really learn what actually matters. And from that point, all I wanted to do was obviously to trade well, do my thing, but to pass on that information to the next person. I feel like information is power, right? Knowledge is power. Well, let me give you that power, guys. Let market give you that power. Can you please leave us on gold? Yeah, last thing I'll say on gold, just like I said before about 5-10 minutes ago, the shorts were looking nice up here. I would still rather be short than long on gold, especially because of how weak the volume is looking down here. Take a look at the drop in volume. Buyers are not looking to actually buy gold. There is no strong aggressive buying pressure to reverse us. So this is just a consolidation point until sellers are able to step in with good volume again. So unless you got the shorts up here, I would leave gold alone until we could possibly start to break down from this area of consolidation again and volume increases as well. But overall, still a bit more bearish on gold. I would be careful with, look at that, guys. That dollar rejecting very nicely off the $100 point. Very good. Very good. Good reaction there. Gold also trying to pull back, but lacking that strength. So when that happens, what can we do? Well, you close it out for profit. If you're not confident or comfortable in the trade anymore, you could just move your stop loss to break even, or even adjust it to that recent high that we had. So you're risking less on the table. But in my opinion, at this point, I'm leaving gold alone. I'm leaving the ES alone. I'm leaving the NASDAQ alone. These are all range bound. Most likely will be range bound, possibly tomorrow too, with a range leading up until that CPI and PPI we have on Wednesday and Thursday. So guys, absolutely appreciate you all for being here, dropping some comments, dropping some likes. That's it. We'll be dropping some knowledge and information and trade setups. Join us back here again tomorrow. Run the like button up. Share it with your friends. Information is key, and these streams are all free for you guys. So appreciate you all for being here. Like, subscribe, and I'll see you all tomorrow.